Good morning, friends. Today, Vikas ji from BM Securities is with us, who has very in-depth knowledge about the banking sector. And today we are going to discuss about fundamentals of IndusInd Bank. So, Vikas ji, what are your views on IndusInd Bank?
Good morning, friends. Today we would be talking about IndusInd Bank. IndusInd Bank is the fifth largest bank of India. It has AUM of more than 4 lakh crore under its belt, and it is one of the fastest growing bank in India. Its retail share is around 53% and rest 47% is wholesale banking. Its CASA is at around 42% and its advances is around 2,72,000 odd crores. Its gross NPA is less than 2%, which is very healthy. Its net NPA is 0.62%, which is again very healthy. And more than that, it has a PCR of more than 72 odd percent. And above that, it has a special provision of 2192 crores as a contingency fund to take care of COVID and restructured asset. And its restructured asset is only 1.25% of its total advances, which is roughly around 3,000 crore. Even if we foresee that in near future, out of those 3,000 crore of restructured asset, anything might go wrong, then additional provision, which is not the part of PCR, is there to cover bad debts. All these signs are of a very healthy bank. Now, how do we value IndusInd Bank? IndusInd Bank, or rather any of the bank, we have to value among the parameters how fast it is growing. It is growing more than 20%. What is the retail and wholesale book size? It's a kind of a retail book size, so it gives the comfort that the bank is, since it's more on the retail side, it gets the comfort that the bank will not be shaky by a big loan if it gets defaulted, because more or less maximum money is under retail. So even if the money, even if some amount of money in retail get default, that will be not a big or that will be a meager amount. That will not be a big amount which can shake the banks. So as I told you earlier, that its provision coverage ratio is around 70% and restructured book is 1.25% of total advances, which is roughly around 3,000 crore plus minus 100 crore. But it has additional provision, contingency provision of 2192 crore, which can easily take care of any kind of a future COVID issues, or even if some loans go default out there from the restructured asset, that can be easily taken care of. So that overall we can say that this bank has a very healthy provision coverage ratio, and it has taken care of future contingencies. It is way above the prescribed limit and it's very healthy. Third, its capital adequacy ratio is above the threshold limits stated by the guidelines and is more than 16%. So it doesn't require any future capital for its growth. Already the profit which they are earning quarter on quarter is becoming a capital for the bank to grow even faster. So they don't require any extra capital from the market. So the equity is not getting diluted. So the old shareholders would be benefiting out of it in near future.
Thank you, Vikas ji. Looks like performance and balance sheet health of the IndusInd Bank looks good. But what about high NPA, and accordingly going forward, what you see the valuations in next 12 months?
Yes, Vipin, the question which you asked is so very relevant, because they have a high NPA, but going forward this high NPA will reduce, because this the last quarter the NPA was on two counts, on vehicle finance and microfinance. Vehicle finance was only for one time because of the change in policy out there in Orissa. Now that policy has been reversed, so the NPA which was there out there in vehicle finance will also going to get reversed. That has already been stated by the management. And with regard to microfinance, there is still pain for one or two quarters, and that will again be smoothened out in near future. So going forward, after 1 or 2 quarters, you will see there will be a huge jump in profitability because of lower provisioning. Right now the provisioning is around 50%, and going forward, say 1 or 2 quarters ahead, if you see, the provisioning will be only around 20 to 30%. So on account of lower provisioning, there will be a jump in profitability of around more than 20-25%, and because of growth, again there will be a jump of more than 20%. So overall in next 12 months you will see the bank profitability will be will be growing by more than 30% year on year. So there will be a huge change in the profitability metrics also. The ROA, the ROE, the ROA will become near to 2% and ROE will go above 18%. So there will be a total re-rating on the valuation of IndusInd Bank. I think that IndusInd Bank would be doing a profit of more than 9,200 or 9,400 crores for the next in the next financial year. So going by that, even if you give a P multiple of 15, there is a more than 40% upside out there in IndusInd Bank. So I have a target of around 1480 to 1540 out there in IndusInd Bank, because there will be re-rating on all the counts. Not only on the not only on the account of profitability, because there will be a jump in profitability by more than 30%. There will be a huge re-rating, because on account of restructured books getting wiped out of the balance sheet, because all the restructured book of some roughly around 3,000 crore will be written back, because it will become a normal asset. It will become a standard asset, because RBI has stated certain guidelines that these books has to follow certain repayment schedule, and if they continue to repay their interest amount for next certain stipulated time frame, then only they can be reclassified as a standard asset. So all these things will change the dynamic, the metrics of IndusInd Bank. And going forward, I foresee so very easily people making 40% return out there in IndusInd Bank if they invest as on date. Provisioning out of that operating profit will come down to 30% of the operating profit. So rest 70% will be PBT. So going forward, you will see a huge jump in the profitability of IndusInd Bank. I'll say so in next quarter.
Valuation looks very promising, and thank you for your information and perspective on bank. And lastly, if you can throw some light on any risk which may have material impact.
Risk management system is paramount important for any of the bank. It has to be very, very stringent and airtight. The process has to be followed to the T, because banks is all about lending. If the risk management system is flawed, the bank can collapse at any given point in time. So with regard to IndusInd Bank, its risk management process is very, very healthy, because it shows out in its numbers. Like PCR is above 71%, its net NPA is 0.62%, and it has provision coverage ratio of more than 130%. And the best part is that its retail book is growing faster than the corporate book. When retail is growing more than the corporate, what happens is that your risk spread among many people. Advanced ticket size is of very small number, so it doesn't impact the balance sheet of the bank. Now coming to the corporate side is so very healthy, because corporate India debt equity has come down so drastically in the last few years that corporate banking of most of the banks in India, corporate advances of most of the banks in India is very, very healthy, and it's in a very, very good condition. And with regard to retail, even in near future some recession take place, some kind of a recession comes into picture and it takes place, the impact of that will be very, very limited, because they have most of the banks, especially the private ones, have extra coverage with regard to future COVID and with regard to any kind of a restructured loss which might come from the restructured book. So all the banks are covering contingency buffer, which might be used for any kind of unforeseen events. And all these parameters will take care of IndusInd Bank, because they have a PCR coverage of 71%, but if you put into account the additional provision which they have done, the PCR becomes 130% of the total gross debt. There's few points you have to remember. Whether the bank is well capitalized, it is adequately capitalized. Whether the bank provision is sufficient enough, it is adequately sufficient enough. I'll say much more than sufficient enough. Is NPA lower than the requisite level? It is much lower than the requisite level. So overall, I'll see IndusInd Bank is in a very, very healthy position.
Thank you, Vikas ji, for your in-depth view and information on IndusInd Bank, and hope our viewers will get some good information from this video. Please like, share and subscribe our channel, and comment also, so that we can make further good videos for you. Thank you.